Hi, I am Anna. I come from www.ntvforex.com. US tech rout continues as a raft of risk negative factors impact across major markets. Video analysis http ntvforex.com News ID 578FB899 2020 11:36:59 AM Market Overview. The Wall Street sell-off has become a significant issue for risk appetite. The rout in the tech stocks may amount to little more than a sector rotation when the dust settles. However, the rattling impact in the meantime is hitting sentiment across major markets. The sell-off is just one factor though, with a slew of other risk-negative headlines hitting across markets today. Infection rates of COVID-19 are accelerating higher, whilst one of the leading vaccination trials by AstraZeneca and Oxford University has been put on hold due to an adverse reaction in one human participant. The prospect of the UK and EU being able to agree on a trade deal before the October 15 soft deadline is looking increasingly unlikely, with UK gilt yields and sterling falling hard. Furthermore, the potential for agreement on a US COVID aid fiscal support package also seem remote as both Republicans and Democrats continue to be way apart in their demands. This is all adding up to risk aversion across major markets. Equities continue to fall, whilst US bond yields are falling with a bull flattening yield curve, which tends to reflect risk aversion. In Forex, the dollar rally continues and the Japanese yen is a key outperformer now. Oil is falling hard on the perceived hit to demand from second waves. It is time to bunker down. Wall Street closed sharply lower in a tech-led decline, where the S&P 500 was 2.8% at 3,332, whilst the Dow was also 2.3% lower. US futures look to be stabilized a touch this morning, but are now lower again, with the E-mini S&P 0.2%. Asian markets felt the squeeze this morning, with the Nikkei 1.0% and Shanghai Composite 1.1%, whilst FTSE futures and DAX futures are also around 0.5% lower into the European Open. In Forex, GBP continues to be slammed on fears that the UK is moving towards leaving the EU with no trade deal possible, whilst the risk-negative bias is pulling JPY outperformance. In commodities, the drift lower is once more looking to take hold, with gold $4 0.3% and silver also lower 0.8%. Oil is another asset that is being driven ever lower by the growing risk-negative outlook. The Bank of Canada is the main focus on the economic calendar today, with a bit of US employment data snuck in too. The Bank of Canada monetary policy is at 1500 BST and there is no expectation of any change to the 0.25% NBSP interest rate, and whether the BOC retains an encouraging outlook will be watched. The US JOLTS jobs openings are at 1500 BST too, with an expectation of to 6.00 M in July, up 1.8% from 5.89 M in June. Chart of the day. Silver. As the dollar strengthened significantly yesterday, the conditions are set up for silver to be taking a turn for the worse. However, with there being a flight to safety across asset classes, this may also help to prevent a significant decline on silver too. This seemed to be the move yesterday, as initial selling was then met with a rebound into the close. A breach of key near to medium-term support at $26.05, which provided a floor in late August, was subsequently bought into and only a small decline on the day. It seems to be a market full of uncertainty right now. An initial tick lower this morning has again consolidated. The initial breach of $26.05 will though be of concern for the bulls if the market continues to drift. A closing breach of $26.05 NBSP would see a breakdown completing a topping out of the price and would imply downside of $2.80. Adding to concern will be that, having been the basis of support for so many weeks during the summer, the 21-day moving average today at $27.04 has now turned to become a basis of resistance. The pressure growing on $26.05 has also come with the RSI moving towards 50 and its lowest since early May. This is very much of another medium-term crossroads now. There is resistance at $27.15 now and leaves $26.30, $27.15 as a near-term sell zone. A close above $27.15 is needed to improve the outlook now. Brent crude oil selling pressure is accelerating on oil. Support after support is now being broken and in quick time, as yesterday's 5.3% decline shows. An outlook-changing move has also now taken hold. A massive break of the $41.30 support from the key July higher lows leaves the outlook now decisively corrective on a medium-term basis and opens the next key support at $37 to be tested. It leaves a big band of overhead supply too now, between $41.30–$43.60 that would need to be overcome for any sense of positive outlook to be regained from here. Momentum indicators are decisively into corrective territory, with MACD falling below neutral, stochastics below 20 and RSI below 30 all bearishly configured now. It suggests that intraday or near-term rallies are a chance to sell now. Dow Jones Industrial Average. It had looked initially yesterday that the Labor Day public holiday in the US had put a pin in the recent selling pressure. However, US traders had a different idea, and once more sold sharply throughout the session yesterday as the Dow closed another 2.3% lower. Already having done mounting damage to the technical outlook, yesterday's decline broke two more key technical levels. A 5-month uptrend dating back to April has been breached, whilst the market has also more importantly closed below the key support of 27,525–27,580. This move now suggests that the slide is more than just a blip in the uptrend, it is something more considerable. A 2-day close under 27,525 would confirm this. Futures appear to be relatively stable this morning, but there again, that is what we saw yesterday before the latest huge sell-off. The next support of note is 27,035–27,070, but with growing corrective momentum now. Further weakness back towards 25,990, the next key higher low could be seen. Resistance is now overhead between 27,580–28,000. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.